Cholamandalam Investment and Finance is in focus on the back of its second quarter numbers. Asset quality has deteriorated a little bit. AUM growth is pretty strong, 30% plus, but dispersal growth rate has come in at a 13-quarter low. We have Arul Selvan, President and Chief Financial Officer of the company, joining in. Mr. Selvan, good morning, sir. Thank you for your time. Prashant this side. Season's greetings to you and your team, your family. Good to always speak with you. Talk to us a little bit about the disbursement growth, sir, and what has happened. Is it just high base, especially in vehicle finance, and what should we expect for the full year across segments?
So vehicle finance, the Q2 will always be a slow quarter because Q1 and Q2s are always slower quarters if you go pre-COVID period and, see our records, because these are monsoon months and inauspicious, months are also there. So this time monsoon has extended pretty into September and even beyond September. So the disbursements have not picked up in the vehicle finance. And harvest has got postponed because of the extended monsoon. This is keeping the fresh disbursements low. The rest of the portfolio had a pretty decent growth, and this would, if you compare last year, there has been a progressive growth quarter on quarter, which is why the base has increased, and that's why we have kept our overall full year target at around the 25% mark, which is what we still like to adhere to. While we have clocked a 33% growth in AUM on first half, we will see a slower AUM growth, while disbursements will, be at a pretty decent pace across various products.
So AUM growth of 25% in FY25.
Correct. Yeah. This was our guidance even earlier. Somewhere in the range of 25 to 30% is what we have said. We still maintain that.
Okay. And so you said that disbursements will outpace AUM growth. So just to try and understand this gap between disbursements and AUM, disbursals to AUM ratio is around 35-36% right now. Where would you want to see it by the end of the year?
No, disbursements will be always slower. See, as we move into longer tenor products like LAP, HL, even in SME as well as in SBPL, these are larger, tenor products. So they stay on the book longer, and in an EMI-based product, the initial rundown of these will be slower as compared to the lag years. So you will see AUM growth being larger in the initial years when you had a substantial growth, which we saw over the last 2 years when we expanded LAP and HL predominantly into the other parts of the country. And that's what is reflecting, in spite of lower lower disbursements, your AUM growth seeming to be higher. Even in the case of vehicle finance, the tenor of products are increasing because of the BS6 norms as well as in passenger cars. So we are moving from the traditional 3 to 3.5 year product to 4.5 to 5 year average tenor across the vehicle finance book itself. So this is why you will see the AUM growth being a higher percentage as compared to the disbursement growth.
Okay, got that, sir. Sir, obviously, you deal largely with the, secured assets, so no such issues there on asset quality. Even if we're just running the numbers as you're speaking, there's a marginal increase in the gross NPA ratio. It's moved to about 3.78% versus 3.6% last quarter. Just give us more qualitative color, because that's the biggest worry right now across the system, right? Hurt in MFI, pain in small businesses, and the worries, and obviously there's unsecured. But the worry is whether this will start spilling over even to the secured side, because if you're hurting on an unsecured loan, whether you'll start being delinquent even on the secured assets. What exactly are you picking up on the ground, and what is your own projection with respect to NPLs?
See, our NPLs will moderate as we move into the second half. And this is also the traditional way that things move, because most of our customers who are in the rural are dependent on harvest. Their earning potential has not picked up for two reasons. One, the rainfall extended into October, and there had been, the harvest has got postponed. Also, all of the festivals have moved into Q3 rather than, at least Navratri being in the Q2, in most years. These two had reduced their earning potential, and therefore it had impacted a bit on the collections, predominantly in vehicle finance, I would say. The rest of the portfolios are behaving normal, and while there had been a little bit of a creep up here and there, they are well within the our comfort zone. With regard to your question on the spillover of unsecured into secured, yes, it is possible, but the good part for Chola is large part of our customers, I would say more than 95% of our customers are business-oriented borrowers. So they are dependent on their bureau score, and they are well aware that if they default, they will get into a problem of being able to continuously get funding for the business. So only the discretionary spending part of the borrower crowd would be in a little bit of a indifference curve with regard to their CIBIL score being poor, in a sort of a downturn when they tend to move into delinquencies or move into defaults more easier than this crowd. So this is the behavior pattern we have seen, and this is what is a little bit of a comfort we draw, that this customer profile would make sure that their delinquencies are kept well within control and they don't cross the line to become a bureau score customer.
Got it, sir. So qualitatively, sir, you're not sounding too worried right now. Now, if you could just quantify that for us as well, what would be the expected, year-end rate on, say, gross NPA, credit cost? What are you expecting in the second half?
So our target is to be better than last year. So we will close the year better than last year. So there would be a significant improvement in Q3, Q4. So you will see that happening.
All right. Hi, Mr. Selvan. Good morning and good to see you. And I want to ask you for two numbers, though. Your provisions went up to around 620 crores. Most on the street were in the vicinity of around 470 to 480 crores. So that raises the question on credit cost, which was, I think, at around 1.5%. For the year, what will that number look like? Point number one. And the second factor is on your NIMs, because your yields came down a little bit and your cost of funds went up a little bit, which caused your NIMs to come to around 7.5%. So what's the guidance on both these two parameters, credit cost and NIMs?
So credit costs, we will be in the range of around 1.25 to 1.3% is still what we maintain. As I was saying earlier, the second half should see some improvements on or a reduction in the NPA numbers, and so that should give us some release on the provisions we have created. So that should result in the NCL numbers being moderate. It would be higher than the 1.2% target we had, tried to, reach for the current year. But I think it will not be too far away. It will be between 1.2 to 1.3% on the overall average assets. On the NIM side, you will see improvements, especially with yields getting improved in vehicle finance as we move into the books becoming more of a higher yield book, which is what is the marginal yields are higher. And you will see that improving in the vehicle finance, yields improving. And cost of funds, in my opinion, should be at the same levels. The marginal increase you saw in the current quarter is predominantly we did some amount of Tier 2. That's the reason.
Got it. All right, Mr. Selvan, we'll leave it on that note for today. Thank you very much for joining in and sharing a lot of that perspective on growth as well as asset quality. You need to take a